In late 2019, after Mike Henry was named as the next BHP CEO, the long-serving and celebrated AFR columnist Matthew Stevens opined that Henry's opening narrative carries echoes of both men, being former CEOs Marius Kloppers and Andrew Mackenzie. He has stressed continuity, but greater urgency in the race for high performance. Current CEO Andrew Mackenzie's productivity laser endures, but Henry will urge acceleration in the race to release the opportunities it identifies. Well, it's fair to say that, as always, Matthew Stevens was spot on. In just over 2 years that Mr. Henry has been in the top job, he's embraced the energy transition that we were just discussing, ramping up the push into battery minerals, as well as potash, while unloading the cash-rich petroleum business. Whilst doing all this, he's also managed to keep investors pretty happy, recently unveiling the third consecutive record dividend. For more, very pleased to welcome the BHP CEO Mike Henry in conversation with Chanticleer columnist James Thompson.
Thank you, James, and welcome, Mike. I know we had a few people putting up their hands, having travelled some distance from Melbourne or interstate perhaps, but you've been on a bigger trip than that in the last couple of weeks. Can you share with us where you've been and what the mood was like?
Well, so I've actually been back traveling since about August of last year, and it's been interesting to see over those 6 months just how things have changed. I remember being at Melbourne Airport when I first took a trip, this was to London, to announce some of what we've done recently last August, and it was a ghost town. Maybe 20 people in the airport, but now things are starting to feel like they're back to normal. I was in Brazil 2 weeks ago, across in Miami in the US last week, and there's just a real energy out there. So people are learning to live with COVID. Things have opened back up. People are gathering in big conferences like we have here today. And there's an energy and expectation that's crept back into things. But just like the discussion that we're having here today, people are trying to make sense of what's going on in the world around us. So there's uncertainty. People realize that we're kind of at a potentially quite a defining point in history, and they're needing to make big choices. Well, you see some that are trying to keep their head above water, others that see this as an opportunity to make choices about how they shape their companies for the future, and that's certainly the attitude that we've adopted, and it sits behind some of the moves that we've made. Same thing applies for the nation, and I know that that's the topic for today, but choices that we make as a nation as to how we shape the economy for the decades to come, I think are going to be quite critical.
Yeah, absolutely. It's obviously been an interesting time to be travelling with geopolitical tensions in the world. I know the direct exposure of BHP to Russia and Ukraine is very tiny, infinitesimal in the scale of the business. But what have you made of the way tensions have escalated and the potential for spillover?
So, look, a huge amount of uncertainty there. So I was last week to predict what's going to, how is this all going to play out? Of course, there's too many variables to be able to predict accurately. What we can say is in BHP's business, it's had a dramatic impact in terms of commodity prices. You look at LNG, for example, a couple of years ago, sitting at about $2 per MMBTU. Earlier today, sitting at $84. You've seen many hundreds of percentage increases in price for a range of commodities, but that is going to have spillover economic effects on inflation, potentially on global growth. So we're forecasting possibly about a 0.5% lower global growth over the course of the next year than we were previously anticipating. And that's a combination of the impacts of Russia, Ukraine, but also China coming out with a slightly more positive or aggressive growth target than some were anticipating.
BHP is a company that thrives on free trade and global trade flows, remaining open and working. Do you have any concerns that what we're seeing here is a hinge in the world that threatens that?
Well, yes, and it didn't just arise with Russia, Ukraine. So this is something we've been seeing play out over the past few years. A bit of a pullback from truly free trade, a changing in the rules of the game. So you've got geopolitical tensions arising, all this, the follow-on from the pandemic, trade barriers arising. And that's why when I say that there's choices that companies need to make, it's choices in a world that's changing. And so for a company like BHP, we're no longer able to rely upon, I think it was Matt that referred to it earlier, the rules that have helped us be so profitable as an economy and as a company over the past 30 or 40 years. We have to recognize that the world is shifting. The energy transition, general volatility in markets. And these are some of the things that sat behind the choices that we've made around corporate structure, which gives us greater agility and ability to act in a dynamic environment, the commodities that we choose to have in the portfolio, which are going to be even more skewed to the upside in terms of the energy transition, whilst creating an even more resilient, better company through the bringing together of the Woodside and the BHP oil businesses.
One of those choices was to demerge the petroleum business, and with Woodside, and Meg O'Neill's here today. Any regrets with oil at $120 a barrel?
So none at all, because we structured the transaction specifically to give, because we've been big believers in the near term upside for oil and gas. Even, of course, we had no insights around what was going to play out with Russia, Ukraine. But we believe that, through the energy transition, the pullback in investment, the durability of demand for oil and gas was going to lead to upside in value for the BHP petroleum business. We wanted to give shareholders continued exposure to that, whilst creating more value through the synergies that we'll realize between Woodside and BHP, and through creating a more resilient company, better able to navigate the energy transition. It's played out bang in line with that. So if you're a BHP shareholder who's going to receive shares in the new Woodside, those shares are going to be a lot more valuable today than they were going to be 6 months ago. But even 6 months ago, we could see the upside.
And to Shamara's point, do you expect that, we are seeing some supply shocks and demand shocks at the same time in commodities, energy commodities? Is a volatility just going to be a part of that for a while?
Well, look, I think it is. So markets overall were more volatile heading into the Russia-Ukraine conflict. Certainly on the supply side of things, we're seeing, exacerbated supply side shocks, be it from conflict, be it, we've had weather challenges here in Australia, particularly on the East Coast. COVID, of course, which continues to disrupt supply chains and supply of some commodities. All of these are leading to greater volatility. And the key is how companies position themselves to be able to contain inflation. So that's been a big area of focus for us, ensuring that costs don't run away from us. But also how you go about ensuring that you've got greatest leverage, in our case, to those commodities that do have that upside skewing as the world navigates some of the challenges that lie ahead.
The big changes you've made over the last 12 months, the unification of the listing in back to Australia, the petroleum decision, the potash decision, these have been made against a backdrop of an uncertain world, as the Prime Minister described earlier, but also a world locally quite disrupted by COVID. And yet the BHP operational performance has been excellent. You must be very pleased with it, obviously, but has COVID sharpened BHP? Is there a sort of benefit here?
So really interesting question. And it is a little bit the duck on the pond, in that there's a lot of furious paddling underneath the water to keep things on track. The team's done a magnificent job in the face of some real stresses. If you look at the challenges to labor mobility here in Australia over the past, almost 24 months now, the measures that we've needed to put in place to ensure that we're protecting people and communities, given that we work close to remote communities to protect them against COVID, have been significant. But the team's managed to overcome that. And, you asked, has it sharpened people? I think it has, but in a way that's aligned with the plan that we had laid out for the company pre-COVID. So in some respects, what COVID has done is it's created a set of circumstances where everybody across the company has needed to lean into exercising the accountability that they have. They were needing to make decisions in the moment. Leaders needed to be more empowering of their people, needed to be more empathetic for what their people were facing, more supportive of people across the business, and people needed to support each other. So there's been a heightened level of collegiality, willingness to make decisions, take action quickly, and with a reframing of the relationship between leaders and people working on the front line that I think has been quite helpful. Now, the challenge for us is going to be, how do we maintain all of that positive stuff post-COVID and not revert to mean?
And what do you think some of the solutions there are?
One of the things that I've done through COVID is I've asked people to step back and reflect in the moment on how work feels, to reflect on how they're working differently, how that makes them feel as individuals, that sense of empowerment, more of a kind of can-do attitude. And then have pointed out that at some point COVID will pass. And if we're not deliberate about this, some of the old attributes of culture and the way big organizations work are likely to creep back in. So it's being on the front foot, clear messaging around it. We've also gotten better at prioritization. So that's one of the things I should have mentioned as well. Leadership. rather than trying to do 1,000 things at once, COVID has forced us to be really sharp about what is most important now to keep people safe, to ensure that we've got reliable production, to do the things that we've been doing on the kind of the strategic or portfolio front. That's something that's been built into the organizational leadership psyche now that I think will continue as we come out of COVID.
So some of those things that you mentioned, resilience, flexibility, adaptability, they've been good things about the broader Australian economy through the COVID period too. The PM said we haven't got everything right, but we've got a lot of things right. How do as a country do we sort of push forward with some of those characteristics?
Well, so I think first of all, Australia, clearly we've done well through the pandemic. I think the resources sector and the strong recovery of China and other economies around the world and the implications that's had for commodity prices, that's played a not small part in how well we've weathered COVID. I don't think that that's a sustainable model. Of course, the resources sector remains very important. Still lots of opportunity to be pursued there. But if you look at the future for Australia on a multi-decade horizon, it is going to be important that we're investing in developing new businesses, new sectors, and given that we're such an export-oriented trading nation, we're going to have the ability to access export markets. But we will all need to lean into supporting small to medium-sized businesses, develop new products, new services that can be both kind of leveraged here in Australia, but also overseas.
Yeah, we've got a federal election coming up. Are there policy areas you'd like to see, maybe not reform immediately, because that's hard to do at the moment, but the thought process starting? Like, what are the areas you'd like to see at least embraced and picked up?
Well, and I do think, just on the topic of reform, I do think now is, reform is hard. But if there was ever a time or a case to be made for reform, it's now. Now, the things that I've called out recently as being areas for policy focus post-election, from our perspective, would be skills.
Yep.
And it's not just skills, to service the, in our case, the resources industry, for example. The government's always been very responsive to that. When we've identified skill shortages, the government has leaned into trying to resolve those. But you've got mobility of skills domestically here in Australia. And so looking at or progressing things like the skills passport, which allow people with certain qualifications to move between the states rather than have to constantly get requalified. That's one key thing. Skilled migration, getting back to pre-pandemic levels, I think is going to be important. And then most importantly, it's ensuring that Australia is able to attract those skills that allow us to innovate or create these new industries here in Australia. I think it's going to be critical. And that will be a combination of a focus on skills, but also the other policy settings that we put in place to stimulate innovation.
Mm.
The other area of focus, I think, would be more funding for DFAT. I mentioned earlier that, as we develop these new products and services, the reality is we have a relatively small economy. And the opportunity, if we want to develop sizable new businesses, sizable new industries, they're going to have to be geared towards the export markets. And having a well-resourced DFAT that's able to assist companies in accessing markets overseas, I think is quite important. And it's something that you see other countries doing quite well, supporting their companies as they go overseas. And for a company like BHP, of course, we're big enough, experienced enough, we've got enough of a global network where we're able to do these things on our own. But if you're a small to medium-sized enterprise here in Australia, I think it's a much harder job to be able to do that off your own bat. So having more DFAT support in place, I think, would be no bad thing.
Yeah, particularly at a time when the world's a bit tense.
And so uncertain.
Yeah.
And having a group of DFAT people overseas who are experienced, well-connected, are able to read the lay of the land, I think would be invaluable to Australian business and to the future of the nation.
Mm. Your head of Minerals Australia, Edgar Basto's here today. He hasn't been able to visit the East Coast too much. What are you making of the, how's the reopening of the WA border progressing? It's been a bit of a mixed picture. Will it be difficult or make life better? What are you seeing early doors?
Well, hey, look, I'm just happy that the border's reopened. It was closed for so long, and it would seem like I'd get a trip planned, and then things wouldn't quite play out in the way that we expected. So the fact that it's open again now, I think is great. It is going to take time, for our business to be able to attract people across to the West, because there's going to be some latent fear that, perhaps the border comes down again or there's further lockdowns. And so anybody who's needing to travel and be away from family for, weeks at a time, there will be a pause for reflection before they take that plunge. But I'm confident we'll get there.
Yeah. And skills in mining generally and out in the West, we have heard pressure's been rising over the last probably 6 months or so. Where are we there?
Well, so mining is not immune to the the pressures that we're seeing right across the economy in terms of people and labor. We've seen it most acutely in certain skills, things like rail drivers, for example, or tugboat operators and pilots and so on in the West. But there's definitely a kind of a broad-based uptick in demand for skilled labor on our mine sites. Now, that was most acute in WA during the period when the border was closed because you had no migration between the states. I think that opening up the borders is going to help with that a little bit. But the reality is that we've got an economy now that's doing pretty well. You've got other infrastructure, government-led infrastructure projects being triggered. The resources sector, of course, is doing very well given where prices are at. That's going to trigger more projects. And so we have to focus on how do we go about ensuring that we're able to attract more labor, or for the labor that we have, that they're able to work most productively. And where we cannot end up is with productivity taking a step back, because that would I think that would create some pretty tough circumstances for businesses like us.
BHP is very focused on future-facing commodities, copper, nickel, and potash. The opportunity for Australia in those commodities too would seem to be pretty good. This is a bit of a chance to ride on BHP's back to a certain extent. Is that right? Do you think there's an opportunity for the country to look into those things as well?
Absolutely. So just to frame it up, the world's going to need probably about 2 times as much copper over the next 30 years as the past 30, 4 times as much nickel, even 2 times as much steel, all to support the energy transition. And 2 times as much steel means more iron ore and more coking coal. There's a huge opportunity for Australia in that. And it's not, part of it is the first order opportunity around supplying more copper and nickel, for example, and more iron ore and more coal. But there's second and third order opportunities as well. The services that can be developed here to service the mining industry, not just in Australia, but globally. That's both finding more deposits, developing them, processing them, but also on the ESG front. Because as the world seeks to meet that need for more commodities, it's going to be doing so with resources that tend to be smaller, deeper, more complex, lower grade. And so the implication of that is that for 2 times more copper, you're actually going to need more than 2 times as much mining. And if we're not careful or deliberate about how the world goes about this, we'll see poor outcomes on other aspects of ESG, water stewardship, biodiversity, indigenous cultural heritage, and so on. And so it's going to be really important that the standards are lifted when it comes to ESG overall, that there's more alignment around those standards, better ways of assessing companies, and better ways for companies to meet those higher standards. And that's where in Australia, given the general level of performance here in Australia, the met sector and the met sector's ability to support companies in terms of ESG products or services, I think that's a further opportunity for the nation as well. Now, I just make one final point. Us capitalizing on this opportunity is going to be nowhere near as easy as it was to capitalize on the opportunity in iron ore and coal. Not that that was easy, but we had both geographic and geological advantages in iron ore and coal. We were closest to the big markets. We had deposits that were relatively close to surface and close to tidewater. That's not the case in copper, nickel, and some of the other metals. We've got less of an advantage over other nations in those metals. So we're going to have to work 2 or 3 times as hard to unlock this opportunity, which comes back to skills, innovation, productivity. All of these are going to have to be areas of focus if we're to continue on this great trend that we've had of the resources sector contributing to the prosperity that we've seen in Australia over the past 4 or 5 decades.
Do you see us, to capture more of that value, processing more minerals here, or is that not necessarily where the value will be created?
Possibly. So in BHP's case, we've recently developed a nickel sulfate plant at our Nickel West operation in WA, and this is to extract more rent from every unit of nickel. We've gone from supplying none of our nickel into the EV battery market to over 90% into the EV battery market, and we're adding more value to each of those units by processing them one kind of step further in the value chain. We'll find examples like that, but I don't think we should start from the perspective that all processing should happen onshore here. There will be times when it's, there's better returns for that processing to occur overseas. But the more Australia is able to do to put the settings in place that make it possible to invest economically in processing here in Australia, better, because it helps to diversify the economy. There's greater value add. It creates more jobs, both in construction but also in operation.
The nickel price is surging as well at the moment, almost unseen levels. Part of that is the demand for EVs in places like China. How do you see the Chinese economy changing? I know you said at your results recently that your relationship's never been better with your Chinese customers, and the customer surveys bear that out. Is there a difference between what's happening on the ground and the geopolitical tensions that sort of dominate the news? Is the actual working relationship still pretty good?
Oh, the business-to-business relationships really have never been better. So very constructive engagement. Early on in COVID, our customers and suppliers in China went the extra mile to support us and I'm sure others in navigating those early days. And likewise, we've done everything that we've could when China was at its peak of COVID to support our customers there. And that leaning into the relationship and support for one another shines through in things like our Net Promoter Score surveys, but also in our day-to-day interactions. Now, you started the question with how's the Chinese economy changing, or how's it going to change? It'll change in the same way that every other major economy changes as it develops. You go from a early period of kind of steel-intensive, infrastructure-led growth. You move into more kind of middle income territory where there's perhaps less of a need for fresh steel, but you see more electrification of the economy, more TVs and vehicles and so on. And along with that, the demand for things like copper, nickel, more sustainable agriculture, so potash, which is a commodity that we've recently taken the plunge on in terms of a major investment decision. All of these things, we expect to see demand there to be pretty resilient. And for a company like BHP being at the forefront of being able to meet that demand, not just in China, but globally, and to do so in the most sustainable way possible, because it's not just investors or the public who are becoming more focused on sustainable mining, it's governments as well. And so we want to be right at the forefront of that to be able to meet the world's needs for more commodities in the most sustainable way possible.
Well, to that point about governments and their ESG requirements, how hard is it going to be to get the next fleet of mines up around the world?
Harder, a lot harder. I mentioned earlier the technical challenges around bringing the supply to market. So deposits will be deeper, lower grade, oftentimes smaller. The surface risks or above surface risks are at least as big, if not bigger, in that you've got the public or communities exercising power in a different way. They're able to get their views on the table and have them heard. More focus on things like water stewardship, biodiversity. And so the challenges that companies need to overcome now to get a mine fully permitted and up and running are significant. And it's going to require companies that have a track record in this, that uphold high standards, with the balance sheet and the technical wherewithal to be able to do hard things. And so I think that, in the coming years or decades, we will see greater focus and differentiation between companies that are good at this and companies that are less good at it. Now, the other thing I would note is that because it is going to be harder, that's going to lead to greater price volatility. So it'll require more of a price signal to see new or fresh supply brought to market more quickly. And for a company like BHP that's already a big supplier of some of these commodities, I think that bodes well in terms of returns.
We do have time for an audience question or two, so please put your hand up. But just while we're getting mics around, Mike, the point you have made about demand-led inflation, where we're hearing a lot of worrying talk about inflation, but your point's been that demand-led inflation is actually a pretty good thing for BHP and not a bad thing for Australia.
Exactly, because demand-led inflation is exactly what it says. It's being driven by greater demand for, well, greater economic activity, which generally means greater demand for resources. And as a export-oriented resource supplying nation, that's going to be a good thing for Australia. And I think, one of the things that we need to remind ourselves of is that this is a cyclical industry. We won't always be able to rely upon that. And therefore, we shouldn't get lulled into a false sense of security by the fact that prices are high and in the near term. We have to be using that as the opportunity to double down on developing the skills and the businesses, industries that are going to help us kind of capitalize on the coming decades, not just the near-term need for more resources.
Do we have any questions out there? I'm going to ask another one, Mike. We've seen, we heard earlier today from Keiyu Jin, who sort of described the changing nature of China's relationship with the world and put the view, I guess, that the country is still becoming more open. Do you sort of see that there's been a lot of talk even to this morning about tensions with Taiwan, possible issues over that? Is that a big concern inside the BHP executive suite, or do you get more focused on the economy and what's actually happening on the ground?
Well, look, so of course, we have a keenest eye on what's happening on the ground and how it's playing out in terms of our direct business relationships. I would have to say, of course, that we do look at what's happening on the geopolitical front, but it really depends on time frame. Clear geopolitical tensions in the near term, not yet manifesting in terms of the business-to-business relationship, but we're also a company that's been around for over a century. And given the benefit that Australia derives from China and its ongoing economic growth, and the benefit that China has derived from Australian supply of resources, one has to believe that in the fullness of time, things recalibrate back into a more constructive footing. I don't want to venture as to when that's going to happen. We're not, assuming that it's going to happen anytime soon. But over the sorts of time spans that BHP thinks about, the time spans that that underpin the big investments that we take, which is kind of a multi-decade time frame, we're pretty confident that there will be a constructive relationship there, both at a business level, but also at a political level.
Last one from me. Jansen, Potash project, we haven't spoken about that. It's in your homeland of Canada. What excites you about potash and this sort of new frontier, I guess, for BHP?
Well, so it is, and Jansen opens up a new front for growth for the company. For those who aren't aware, potash is one of the three primary fertilizers. So it helps support more sustainable farming. And the thesis that we had behind getting into potash and the Jansen investment was that the world population is going to grow, living standards are going to continue to rise, diets will improve, there's constraints on arable land, even more so as the world focuses on climate change, and therefore agricultural yield is going to need to go up. All of this bodes well for fertilizer demand and potash demand. On the supply side, you only have two big basins, Canada and Russia, Belarus. And our view was that already makes for an attractive set of fundamentals on the supply side.
Yeah.
Of course, there was always the view that one of those two supply basins was subject to more geopolitical risk or risk of geopolitical disruption than the other.
Indeed.
And we see this playing out in real time. So the thesis that we've had around potash is being borne out before our eyes. I just wish we had gone a little bit quicker on it, because if we had supply right now at $600 a ton, that would have been a nice little addition to the bottom line.
You'll get there. You'll get there. Ladies and gentlemen, will you please thank Mike Henry?
Thank you. Thanks, Mark. Thank you.